Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest on the show, just head on over to missionmatters.com and click on Be Our Guest to apply. All right, so today I have Jim Downes on the line. He is CEO and founder of Blueprint CFO. And for those that have not caught our previous episodes, Jim is a return guest. So good the first time we had to bring him back. And we're also announcing today, so a launch that Jim book launch that Jim created in a collaboration with Mission Matters. I'm really excited to get the word out about this writing. So FutureFocused Accounting. We'll get into that as well. And Jim, first off, just want to say, hey, welcome back to the show.
Thanks for having me back, Adam. It's always a lot of fun to be on the show. So
come on, Jim, we did it. Come on, we're live. The book is finally live. We're finally out there. We're out in the middle of promo. How do you feel?
I'm excited. All my clients are excited to get a copy of the book and read my chapters. So I'm going to be distributing those out next week. So I'm all excited.
Oh, man. Great stuff. And we'll do a deep dive into your accounting. And of course, we'll go into Blueprint CFO for those that maybe haven't caught some of our previous work together. But we'll start this episode the way that we start them all with our Mission Matters Minute. So, Jim, we at Mission Matters amplify stories for entrepreneurs, executives, and experts. That's our mission. Jim, what mission matters to you?
So our mission at Blueprint CFO, Adam, is to bring actionable data to business owners to help them run their business better. We bring the capabilities that a large company has in terms of getting at data that's residing in their business, then bringing it to their attention, things that need to be addressed that where they're not doing as well as they might think because they don't have any data.
It's awesome. Love having you on the show, especially we have a lot of entrepreneurs, business owners, executives that listen to this. And I'm a big fan of the outsourced CFO model. We use the outsourced CFO model at Mission Matters and big proponent for small business owners. So maybe just to get us started here. So tell us a little bit more about your background really and how you got started in business and as an entrepreneur.
So a lot of accountants, I started my career in public accounting. I was a CPA at a firm in Detroit, Michigan. Yeah. And I did that for like 11 years. And, what changed my life basically was a kind of an aha moment when one of my clients asked me when I was giving them their annual report, hey, Jim, you're our financial expert. What do you think we should do different next year? And I realized that I didn't really know all that much about their business because CPAs don't really have the time to delve into the business in terms of where's profitability being created and what's working in sales and marketing, what's not, what are the operational problems that the company should be reviewing and doing something about. So I realized I really didn't know all that much about their business. So I decided that to change my way of thinking about accounting and make it more future focused and thinking about, hey, what does the data tell us that we should be doing different next year for this client or next month? It doesn't have to be next year. It's just looking at that data and saying, what does this tell us isn't working and we need to take action.
Switching gears here, and we'll definitely get further into Blueprint CFO and how you're helping business owners accomplish exactly what you're talking about. But switching focus just for slightly, I want to get into the book. So FutureFocused Accounting, Your Profitability Gamechanger. What was the inspiration behind this topic?
So most accountants, and I'll say this, tongue in cheek a little bit, but most accountants are historians. They're documenting what's happened in the past. And I'm sure there's exceptions to the rule, but in general, that's what accountants do. And they don't go to the next step, which is, what can we learn from these results that, we should counsel our CEO. If you're a CFO of a company and you're reporting to a CEO, what should I tell the CEO we need to do different based on the data that I'm seeing here? They really typically don't do that. Or a CPA, same thing. Will do just document how the company did in a prior year and put out a very fancy report with an opinion on it or, their letter that's saying that they've reviewed everything that looks correct. But they don't go to the next step, which is, okay, what does this portend for the future? How should we be using this data to change the dynamics so we can help this company make more money.
Hmm.
And really, that I think is the power of future-focused accounting, is thinking. All of our people, and we have 14 employees now, everybody in our company, when they present me with a financial statement for a client, they know that they better also come with some ideas of how we can make the numbers better.
Hmm. And so one of the things that you write about is really that accounting can be viewed as an asset. I mean, tell me a little bit more about that.
Again, this is maybe somewhat of a generalization, but most entrepreneurs do not want to spend a lot of money in the accounting department because they
Yeah.
feel like it's a cost center. And in some respects, it is a cost center, but I find that when you have great accounting, it tends to pay for itself. So what we encourage our clients to do is think about whatever money they pay us to help them with their business. Think of that as an investment in the future.
Mhm.
It just like buying some research or doing a marketing
Yeah.
program or something. It's basically getting you data that is going to help you do better in the future and will end up paying for itself. We have example after example where we went in and worked with a client and found some things that were going on that needed to be addressed. And the benefit to the client of addressing those things was multiples of what our fee was.
Yeah. And so I think this relationship with money and understanding, I feel like, and I'm going to pick on myself. So you're making generalizations. I'm going to pick on myself here. So that's what most of this show is about anyway. But sometimes I'm so focused on like revenue, sales, like what are we doing, that I don't always look at the other side of things and think about like, different costs or different expenses. And do we really need that? Do we really need that software? Do we really need, some of those other things? And I find that every single time I go through this exercise, or I really kind of like there's always savings on one end versus another. Now that's very surface level, what I'm talking about. That's the low hanging fruit. But what you're doing is a little bit more, there's a lot more strategy involved. There's a lot more that goes into making those type of changes. So you mentioned that, time after time, certain changes come up that possibly lead to, paying for services and otherwise in multiples. Like, what's an example of that? Obviously you don't have to give a company name, but I want to let people kind of visualize that.
I mean, this is a very, very, very basic
Mhm.
example, but having a budget and then
Yeah.
using your budget to run your business. So people do have budgets sometimes, but they don't use it to run their business. And
Mm.
they after they create them in the beginning of the year, they kind of forget about them.
Yeah.
So with our clients, we go through a detailed analysis of the expenses compared to the budget every month, line by line. And you'd be surprised. It kind of was what you just said. When you go into an account
Yeah.
and look what's in there, it never fails. The client says, "What's that? What's that 10,000 I paid for the so and so company?" They don't even know,
Totally.
because they're not getting into the details. Because I understand they're busy. They're flying at 100 miles an hour,
Yeah.
and they don't have time to get down and basically what they do typically with their financial statements is look at the top line. Oh, we did $1 million in sales, and look at the bottom line. Oh, we made $100,000. Okay, but nobody looks at anything in between. And so, by paying attention to your costs and doing a deep dive to your costs every month, the benefits come out because you see things that you're spending money on that you didn't even know you were spending money on typically, which is crazy.
Oh,
I mean, I'm talking not very big businesses. These are
yeah.
$10 million in sales, $5 million in sales, and they have the costs going out that they don't even know what they are.
And so there's obviously, we all start at one place. Some people are further down the continuum to having all of this, figured out. Some are, kind of beginner level still, let's say. But either way, one of the things that you write about really is how do you make that shift, from where you were to where you want to be. Like, tell me a little bit more about that.
I think it's pretty much a time commitment. Doing a monthly financial meeting, which is what we make our clients do, and not say the word make, but typically what happens when we start doing a monthly financial meeting and go through their numbers in detail, they love it. And I'm surprised at that myself, because as an accountant, I'm sometimes thinking, I'm going to bore the heck out of these
Yeah.
clients with all these numbers and everything, but they actually are totally mesmerized, because you have to make it into a story. You have to make it into something fun, that you're doing, and what I call the great game of business, and looking at your numbers and seeing how you can make them better. And, so accounting, most people would think of accounting as a very boring thing to do, but it's really a dynamic, fun thing, because at the end of the day, that's where all businesses, all the money, all of the dollars and cents end up in the accounting department.
Yeah.
So all of the hard work you're doing to attract new clients and do a good job with the client, it's all for naught if you don't pay attention to your dollars and cents.
And so what I like about your process, and even what you're just describing, and I know we don't often use this term, but it's almost like you're a coach in the same sense. But you're doing the work, obviously, out as an
Yeah.
outsourced CFO, but you're physically doing the work. So I want to make that distinction for the audience, but it's almost like you're a coach too, like that monthly. It's almost like an accountability or like a mastermind, like for any of the business owners out there that have maybe worked through a program where they have a certain level of accountability and there's regular meetings. I mean, it also has that feel as well, it seems like.
Yeah. So my actual chapter in the book is called "You Need Great Accounting to Have Great Accountability." And so, those kind of meetings, when you're looking at accountability and you start looking at how you did, if the numbers are wrong, then it's kind of a waste of time, because everybody's like, well, no, sales were higher than that.
Mm-hmm.
Or, I didn't spend all that money. So you have to have great accounting to have great accountability. And we kind of debated that when we were writing the chapter: does accountability is the beginning part, or accounting the beginning part? And we finally came up with, you can't have accountability if you don't have great accounting, because people are going to just question the numbers and say, that's not right, or we collected those receivables, or I have hundreds of examples. And so having great accounting is the starting point to holding people accountable. And how many people go to work every day and aren't held accountable, and what a waste of money that is for many, many companies. It's kind of a sad situation.
Yeah. So, and kind of going through your process in your writing. So you go into, understanding the past, of course, that's a given. The present, where somebody's currently at, and then really mapping for the future. And I think that's one of the fun parts. Like once you go through the work, and by the way, for everybody listening, I'll be posting we sell books too. So even though we have Jim on the line and he's giving us the knowledge from his end, we'll be putting a link into the show notes so that obviously you can pick up a copy of the book and read Jim's writing in detail. But mapping for the future, Jim. So this part of the book, tell us a little bit more about that.
Well, I want to go take in a little different direction. So we were talking about cutting costs and having a budget, and that's typically how people think of accountants.
Yeah.
I'm going to give you an example. We had a client last year, and they sell a consumer product over the internet. And when we looked at their sales versus the plan, they were not hitting their target. And when we met with them and went through our monthly meeting, they said, well, Jim, you don't probably realize this, but we've been sold out of our top SKU for the last 6 months.
Oh, wow.
And I'm like, what? How did that happen? How do we end up not having our top SKU in inventory? And like, well, wow. We didn't plan properly when we ordered our supply for the year. Yeah. We didn't do it in any kind of scientific manner. So we have a data analysis department, which we brought in to help the client plan for next year for their 2023 buy. And they're just ecstatic about it, because they've never actually done it in any kind of scientific way, and they have $5 million worth of inventory.
Wow.
So, we're going to help them. We estimate that because they didn't have these SKUs in place, they lost about $3 million worth of sales. We created what we call the green light, red light report. So green light is, hey, we need more of these SKUs, and if we get them, we can make $4 or $5 million of sales. And here's the red light report, which says, hey, we got way too many of these SKUs, and we need to either figure out a way to put them on sale or, turn them back into cash, because they're going to be sitting on the shelf for years if we don't do something with these SKUs. So they gave them great visibility into their inventory that they never had before. And they've got $5 million invested. So, people think of accounting as cost cutting, but it's also looking at revenue and how do we generate more revenue? And that could be in a professional service company. How do we get more revenue out of each person? How many hours is everybody working? How much are they utilized? And a lot of times professional service firms aren't really paying attention to that like they should be. And same thing with clients. There are certain clients that maybe you could be selling. You don't need more clients. You just need to sell more to your existing clients. And so tracking that, what have you been able to cross-sell to different clients? And, is that getting better or is it getting worse? It's all good data that you should be paying attention to.
Yeah. And looking at and taking your example a little bit further. So, I mean, this is one of the things that I think is a huge benefit to the fractional CFO model in general, because when you're working with a team, an experienced team like yours, who are working with many different companies, and they have it's just a different vantage point. Like even if they had somebody in-house, maybe that was keeping the books or that was doing a certain amount of work, because that company had never really done anything in terms of forecasting and then with the data analysis company or anything like that, because they haven't done anything like that in the past, the likelihood that that system could have been brought in and that idea or even the thought process would have been done probably is a little bit less than working with a team like yours. So when I think about like just the difference in ideas and the dissemination of knowledge, it seems to me like there's a little bit of a benefit there.
I totally agree. And, when I started doing this, I had my own practice, and then I decided I wanted to bring in more CFOs.
Yeah.
And we have now 6 CFOs. And kind of going that way you just said there, we have 6 people that have been in business for years and have a lot of knowledge and wisdom about all kinds of things like tax credits and how to minimize taxes. And, here's what happened at this company that we could use at this company. And maybe this kind of software would work better than the software this
Mhm.
client's using, and I've had it at this other client that's
Yeah.
similar. So having 6 CFOs is, hiring us, you get one CFO to work with you directly, but you have these other 5 CFOs that are there for a reference point if there's questions or things that we want to think, brainstorm about how to help this client. It's pretty awesome.
Yeah. Yeah, that's exciting. When you think about the cost, when you think about the cost savings of that and just that and to have a firm that's working on your behalf and that are, with that type of bench, that's awesome. I speaking of the firm, I do want to spend some time getting into Blueprint CFO. So we spoke a little bit about it, but maybe go a step further and tell us a little bit more about the firm.
So you said the word bench and made me think of something I should tell you, and that is when
Yeah.
we always start with a client, we start with a benchmark of how they're
Mm,
currently performing, and we do a 3-year look back to say here's how the company's growing. It's growing at 10% per year. I'm just making that up,
mhm.
and they're making on average, $200,000 a year.
Yeah.
Well, that benchmark is really what we're measuring ourselves against in terms of our ability to help the client do better. And
Mhm.
so that's really important that we do that, and that we want to make sure that when we create that benchmark, that the accounting is being done properly, so that we can rely on it. Because a lot of times people aren't doing accounting properly, and it needs to be
Yeah.
cleaned up a bit. So I think that's a interesting thing to think about is we put that benchmark forward to the client and say, okay, now what's the plan for the future that's
Mhm.
going to grow revenues at a faster clip than what you're currently doing, and keep costs low so that we can have a bigger profitability. And then
Yeah.
at the end of the day, how do we minimize taxes? Because making more money is great, but then you have to pay the tax bill. So how can we keep those taxes as low as possible through tax credits or
Mhm.
deferred compensation and other things like that?
Mm.
So we have a process that we use with every client, and it's proven to be very powerful. And it creates a long-term relationship with the client where we're coming back month after month and working with them to help them with their business.
Mm.
And it makes it really fun because I was with a client the last weekend. We did a retreat with their executive team, and
Mm.
one of the men in the room after the day of going through the numbers and everything came over to me and said, Jim, I just want to tell you what you're doing is extremely powerful. And so forgetting all the money and all that you're earning doing this, having people really appreciate
Mm.
the things that you bring to the table to help them with their business is really where the satisfaction of doing this
Yeah.
comes.
What are the types of companies that are typically usually a good fit to work with you and your team? Are there certain industries or size of company, or is it agnostic in terms of industry? Like, give us a flavor for that.
Well, typically it's a privately owned business. It could be a family business that's been in the family for generations.
Hmm.
I always say our target clients are manufacturing, construction,
Yeah.
professional services, e-commerce.
Hmm.
But we just signed up a large nonprofit,
Hmm.
and we also are working to sign up a large restaurant chain.
Mm.
So the common denominator is having a business, and it can be a small business or big business.
Right.
the things that we bring for small businesses really applicable to bigger business. Most of them already have a full-time CFO, or they have a financial planning and analysis department, which is what we're doing, FP&A, they call that, financial planning and analysis. But those small companies don't have the luxury of having that kind of capability. And so our target market is typically starting at 2 million in sales per year up to 100 million in sales. Our largest client is 100 million in sales. They don't have a full-time CFO, and they've, for years run their company flying blind as far as I'm concerned. And so having us come in and really help them is giving them, we cleaned up the accounting so every month it is accurate. Because what they were showing is that one month they were losing money, the next month they were making money, and that's just because the revenues and expenses weren't being matched up properly. So by doing it right, you can make sense of how you're doing over time and do better and focus on how to improve those numbers.
Yeah. What are some of your goals for Blueprint CFO going forward?
So we have grand aspirations. We have we have a blueprint for Blueprint, just like we create a blueprint for our clients. And the blueprint is, 10 million in sales in 3 years and operating all throughout California. Right now we have an office in Orange County, California. We're opening an office in San Diego in the next few months. But there's California alone has many markets. But then you extend that to the western states. You've got Arizona, Nevada, Texas. And so there's many companies that could benefit from our service. And our goal is to spread the word and get more CFOs on board that will help our clients and take the blueprint process forward so that many companies are getting the benefit of it that aren't getting it today.
Yeah, that's great. I mean, like I said, I'm a big fan of the model. I'm a big fan of the work. And for those that are maybe out there and haven't considered the model, like you mentioned something for the larger companies, obviously maybe they have an in-house CFO, things like that. For the, the small business owner that maybe, has a bookkeeper, right? Or something like that, like in-house. Like to me, this, or or a bookkeeper, or maybe a couple people that deal with this. To me, it's a perfect fit. Like it's like they have a certain amount of infrastructure in place. Obviously, maybe they have their CPA, something like that. But this is higher level strategy. This is kind of the glue that brings everything together.
Yeah, I mean, not to target anybody, but a lot of times they do have their CPA involved, and our fees are comparable to what they might be paying for their CPA to do their books. But we're bringing a lot, like you just said, we're bringing a lot more to the table with respect to analysis. So our budget, typically coming into a new client is $3,000 to $5,000 a month. And that includes,
much less than hiring a full-time CFO. Let's say that, right?
100%. And, so it's easy to put your toe in the water and just see how it might help your company. In my opinion, I don't see that even for a company that's at 5 million in sales or 10 million in sales, $3,000 to $5,000 a month is not a major financial commitment. And so, and our contracts are always, cancelable within 30 days notice. I mean, so you can start down the road and see, like, most people don't know what a CFO can really do for them because they never had a CFO. That's the challenging part we have. They sometimes think of a CFO as like a super accountant. Well, we are expert accountants, but it's really more the strategic side, which you've picked up on and keep saying in our conversation here. It's super important. That strategic partner to help them grow their business using their numbers. I think that's our secret sauce. And for $3,000 to $5,000 a month, you can get started and find out, what are the benefits, and is this something that pays back?
It's great. Well, Jim, just have to say, we're in the middle of book promo. Thrilled to have you back on the show. For all the audience, hey, we're going to put the link in the show notes for the book, all that good stuff. If somebody wants to follow up, learn more about Blueprint CFO and connect with you and your team, how do they do that?
So they can call me directly on my cell phone, 949-405-5440, or visit our website at www.blueprintcfo.com.
Fantastic. And we'll put the website link, of course, in the show notes so that our audience can just click on it and head right on over and check out what you're doing. And speaking of the audience, if this is your first time with Mission Matters or the Mission Matters platform, we're all about bringing on entrepreneurs, executives, and having them share, how they do what they do, what they're doing, how they're making a difference in the marketplace, and really giving back and adding value. If that's the type of content that you're into or sounds interesting or engaging to you, we welcome you. Hit that subscribe button because we have many more mission-based individuals just like Jim coming up on the line. And Jim, again, thank you for coming back on the show. Thrilled to have you published and excited to continue on this book promo with you.
Thank you, Adam, and thank you for having me back on the show. We look forward to the next time.